morning, everybody. Assalamu alaikum. I'll give a pretty brief outlook. I'll try and keep to the time, just in terms of our economic outlook for the GCC and how that should be supportive of the shipping sector in the coming years. So where do we stand in terms of a growth outlook? Well, of course, oil production curves will likely keep headline growth at a softer rate. But when you look at the non-oil private sector outlook, it's actually pretty solid. So we expect weighted average growth in the block of the non-oil sector around 4% over the next couple of years. So that's broadly in line with the IMF's forecasts for developed markets, so about twice the pace of the advanced economies forecast from the IMF. Although, as noted previously and as the IMF have noted, there is, of course, a great deal of uncertainty going into this year in terms of what the Trump administration's policies might mean for the global economy. One of the reasons we are particularly bullish on the non-oil private sector in the region is the huge value of project spending that is underway. So $3.5 trillion across the block is being implemented. And this should be supportive of the shipping and port sector in a number of ways. Firstly, it will boost general economic growth. That should boost business activity, household spending, etc., which should boost throughput at ports. Secondly, these projects will necessitate massive imports in terms of construction materials in order to realize them. And then finally, the transport sector, as we can see here on this chart, does play a role in this spending. So there is spending going into the port sector itself as well. Now, how is this going to be funded? Of course, oil prices have not been perhaps where the GCC economies would like them to be. OPEC Plus continues and is likely to roll over again its oil production curbs for a fourth time. It was reported yesterday. So how are they going to finance it? We forecast that Brent crude will average around $73 a barrel this year. So that's down from an average of $80 a barrel last year. And while that is comfortably above the UAE's break-even point, it's some way below that for Saudi Arabia. Well, as we can see, there is a huge amount of funding available in the sovereign wealth funds, which is assets under management is around double the regional GDP at present, and that is a potential monetizing stream. And also, debt levels for regional economies remain fairly low, especially when compared with comparable countries' economies around the world. So that leaves scope for further borrowing in order to implement these projects if necessary. And indeed, we've already seen Saudi Arabia come to the market again this January, similarly to how they did last January. Now, looking at the UAE in terms of economic growth, there's really been a step change higher coming out of the pandemic. Prior to the pandemic, we can see growth was averaging around a kind of 2% mark in the non-oil private sector, and coming out it's been that much stronger. Some of this, of course, could be attributed to the reopening gains coming out of the pandemic, but even as those have been won, it's still been maintained at a robust pace. And I think this is testament to the policies being acted by the authorities here around the heavy investment, around the changing of the visa laws, the foreign ownership of businesses, etc. And this is boosting a diversified economy. So on the right-hand side, we see the growth of various sectors over the last 10 years. And we can see the oil and gas sector, well, still a sizable proportion of the UAE economy, is still around 25%. It hasn't been having that same pace of growth as we've been seeing in all those diversified other sectors, which will be supportive of freight shipping. Abu Dhabi has seen particularly strong growth in recent quarters, coming in above 6% in the non-oil sector. And a lot of this, or the fastest growing, has been the transport and storage sector. It might only be a fairly small proportion of the economy at large, but you can see in the chart on the right-hand side there, it's really been recording rather remarkable pace of growth. Now, a lot of this is attributable to what is going on at the airport. There's been very strong growth there, but it is also to do with the strong growth in freight shipping, with various statements accompanying the GDP print really citing strong growth in cargo throughput at the Emirates ports as being supportive of the growth more generally. And similarly in Dubai, transport and storage again has been one of the key fastest growing components of the economy, and it's a larger component of the Dubai economy as well. So there have been recent growth prints where it has been the primary driver of economic growth. Again, a lot of this has to do with a very strong growth in Emirates and the airport, but it's also strong growth being seen at the ports, with Jebel Ali recording a monthly record in July this year, 1.4 million boxes through the port, and I think it was 4% growth year on year in H1, so a pretty strong performance there as well, supportive of a broader strong growth outlook in the UAE in Dubai. Some of this is being supported by population growth, of course. Just to give a quick indication of that, on the chart on the left-hand side there, we have private school enrollments. Only 6% growth this year, still pretty robust though, and the previous 2 years to that, it was 12% growth year on year both years. So people continue to move here and settle down, bring their children, put them in schools. So supportive of ongoing growth again. And again, similar to the rest of the GCC, there is a large amount of project spending going on in the UAE, which will also be supportive of the freight transport sector. So in 2024, the contracts worth $83 billion awarded over the course of the year, and that is on top of the $93 billion worth of projects awarded in 2023. All of this will necessitate imports of goods going forward during the lifespan of these project implementations. As to turn a bit more briefly to Saudi Arabia, again, headline growth figure this year will likely be constrained by oil production curves. We forecast 3.3% headline GDP growth, but the non-oil sector has been performing far more strongly. We forecast growth of 4.5% in the non-oil sector in KSA this year. And January, the PMI survey, the non-oil private sector PMI survey, saw the strongest results in over a decade. So Saudi Arabia really starting the year on the front foot, and this will be supportive of various freight transport modes in the years ahead. As will the huge level of spending planned in Saudi Arabia over the next several years or over the next decade. This is just giga project spending, so there's all sorts of other spending going into new roads, housing, etc., which isn't covered by this. But budgeted spending on giga projects is around $900 billion. And while there have been various headlines and statements about a recalibration of this spending going forward, you can see in the chart of a table on the right-hand side there's already around $100 billion worth of contracts that have been awarded. So these projects are moving forward and they are huge. Now, just to finish off, as been mentioned already, clearly the trade wars or risk of trade wars coming forward this year does pose a challenge to a small, open, trade-focused economy like the UAE and the GCC more generally. But I think they're in a fairly good position in which to weather this storm. In terms of exports, they are primarily to the east, but imports are far more diversified, and this should help secure it from any of the kind of repercussions of a global trade war. That's not to say that global geopolitics does not impact regional economy. We had the disruption to Red Sea shipping over the past year or more, and you can see the impact that had on vessels passing through the Suez Canal, and this had a very direct impact on businesses here in the UAE, where we saw a very sharp spike in backlogs of work as businesses couldn't get hold of those materials as rapidly as they might otherwise have done. But just to finish off, I think the policies being enacted by the government here will help to weather and through any potential trade war storms. And we can see the various trade agreements that have been agreed or in the process of being agreed by the UAE with countries as far afield as Costa Rica, Cambodia, Georgia, New Zealand. All of this will help to secure frictionless tariff-free trade. And indeed, just in the last 24 hours, we had the signing of the latest CEPA agreement between the UAE and Ukraine, a testament to how much work is being put into ensuring that the UAE remains insulated and insured against potential trade wars in the coming year. Thank you, everybody.